Good morning, good afternoon, good evening, traders from across the globe, and welcome to the 996th edition of Short-Term Trading Live with Oscar Carboni, and that would be me. Traders, Oscar Carboni here. Again, another lesson, another chart segment to show us what very likely will be coming next. This video is for trading tonight through tomorrow. That's Wednesday, March 20th, 2013. Traders, as we know, futures trading can be extremely risky and cause substantial financial loss, and futures trading is certainly not suitable for all trading accounts. All right, here we go. Let's look at this. For trading on Wednesday, this is the June E-mini S&P. Traders, as you know, we have been in a very strong F flag, as you can see. But the last 2 days we have fallen out of that F flag. The OMNI has started to point lower, and nothing we can do now but look at the short side. Now, as you can see, we are 2 full days below the flag. So if another down day comes, it comes. But I don't think you can get lower than this blue line like you've seen here. And you've seen when it began here. I don't think you can get much lower. You can pull back maybe 1517, 1520 in the E-mini S&P. But right about here, you're going to find support. So there's your E-mini S&P. We are selling rallies. We have no choice but to sell rallies into Tuesday night into Wednesday. But there's something to remember here, and that is this. Today is FOMC Day, Federal Open Market Committee Day. It is Fed Day. The Fed has their meetings, right? Well, this meeting ends today, and the Fed's going to come out and obviously not raise rates. They couldn't possibly touch interest rates right now. So we know there'll be no Fed decision. However, the Fed coming out this afternoon could very well stem the tide and no more down days. In other words, you had 2 really big days right before the Fed Day. Fed Day happens to be tomorrow on Wednesday, and it looks like the Fed will turn this market around. So any short trading that we do will be quick. It'll be tonight into tomorrow morning, and we will be out of those short trades long before the Fed announces. So we don't expect the Fed to do anything, but we are below the F flag, and the OMNI has flipped, so we cannot take a buy trade. We can only take a sell trade until the OMNI flips back up. Here's what we're looking at. Very, very nimble if you are going to take a short trade at all. Let's continue to look. Bringing in that theme trade is the Dow Jones Transportation Average, deemed the leader of U.S. indices. That, my friends, is basically a flat top right there. Flat top, and it's a little worrisome. Flat top. That, if you ask me, is slightly worrisome. And flat tops produce market drops, as we know. That's a flat top. Now, you can back away from the flat top and you go, well, Oscar, yes, that's a flat top, but it's also a small flag. You see the flagpole, and you can just say it's a weird-looking flag. Now, I get that, and I can put that together, and I absolutely see it, but that's a little bit more speculation than calling a flat top for what it is, and a flat top is a flat top. This weird-looking flag is unorthodox and may or may not be one, but we know the flat top is flat and a top. So for now, we have no choice but to go with that. Now, traders, this market has been strong and solid, and we are not bears. We are not looking for a breakdown, but a pullback could happen, right? You could get a pullback. I'm not really expecting much. I think after FOMC, after the Fed speaks, this thing goes straight up, but that's what I think. That's my mind speculating using 31 years of experience. However, my mind is not going to show us the path to the future. The charts will. So I am calling what I see on the chart. The chart is presenting us with a flat top in the Dow Jones Transportation Average. We have no choice to respect it. So there is your flat top. Let's go look at another chart. Traders, when you look at the Dow Jones Industrial Average, you have the exact same thing. You are now 2 days below the F flag. 2 days below the F flag. So if you are 2 days below an F flag, you have no choice but to start acknowledging your indicators. And our indicators are all in the overbought area and starting to point towards the downside now. That's your MACD. That's a powerful indicator. And it's, you know, it's the leader, and it's the Dow Jones Industrial Average, the secondary huge market. And I have to say that, unless we turn around and straighten out with the Fed meeting this afternoon, that is starting to turn into a bearish signal. Again, I believe the FOMC or the Fed will just turn this right into a buy, but that's what I believe. The chart is telling me that you need to start watching out for the downside today, Tuesday night into Wednesday day, and then we'll sidestep it when the Fed goes to speak. So traders, that's what I wanted to show you in the U.S. indices. A couple of more charts here. Let's take a quick look. Okay, traders, you are looking at the corn. This is the corn daily bar chart. This is your May corn daily bar. Traders, we are now above OTAPMA, and here's the beauty of the corn trade. You hit OTAPMA and basically the bottom of this trend area on the same 2-day period. See this yellow trend line? End OTAPMA, got above that at the same time. Now you're above the 200 bar moving average. Look at it a little closer. Now you're above the 200 bar moving average. That looks pretty good, traders. So you got to expect the upside for corn, at least now that it's above our two major averages, and should start heading higher. So we are absolutely looking to be buyers of corn, and we think the corn can move higher. Another market we've been trading day after day and doing quite well is the soybeans. Let's look. Traders, opposite of the corn lately is the soybeans. The soybeans have been coming down, down, down. We were in this killer bear flag. The bear flag worked perfectly. We dropped. Then we got below this major support illustrated by the dotted red line. Continued to drop below the 200 bar moving average, below OTAPMA, OMNI Trading Academy's proprietary moving average, and has continued lower. So you could get a 1 or 2 day reprieve. This little bar today tells me that you probably don't want to short it yet. You probably want to see the soybeans head back up towards this red line and the 200 bar moving average, where then you might get brave and want to sell into that area right there. So we're not going to touch the beans today. We're probably going to look at corn and wheat if we're going to trade grains. But there's your soybean trade. It's worked really, really well on the downside. You may get a 1 day reprieve, but we are still sellers of rallies in our soybeans. Traders, thank you so much for coming to today's class. Always remember, keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Traders, thank you so much for coming to video 996. And remember, if you're going to be short, be very, very nimble on this day. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.